Hello everybody, I am Parvesh Aghi. Welcome to my channel. I am a chartered accountant currently working as a visiting faculty with the Institute of Chartered Accountants of India and associated with many universities in India. In today's lecture, we are going to talk about security analysis. Now, this is your CA final course, Paper 2, Strategic Financial Management, and I am CA Parvesh Aghi, professor for this lecture. Now, whenever we want to take a decision with respect to buying stocks or shares from the stock market, we need to carry out an analysis. Now, if you are a long-term investor, so you're more interested in carrying out a fundamental analysis of a company. Whereas if you are a short-term investor or a trader and want to trade in a future and option trade, then you're more interested in technical analysis. Now, even a long-term investor would like to buy the shares at a low point or a low price. So he will also go through a technical analysis to buy the stocks when they are available cheap. So the technical analysis basically helps him to take the decision to buy the stocks at the right time. So there are two methods basically which are used commonly for analyzing stocks. One is called the fundamental analysis, another is called the technical analysis. According to the fundamental analysis, the share prices are determined according to the fundamentals of the company, its growth prospects, its current profitability of the company, how the company is being managed by the top management, and also depends upon the economic situation prevailing in the country, whether the economy is doing well or the economy is in depression or recession. So all these factors affect the share prices of the company. And also, the more important is the industry to which the company belongs and its future prospects. As per the technical analysis, it is the supply and demand which plays a very important role in determining the prices. If the shares are in demand, there's a lot of people who are buying shares that will lead to rise in the prices of shares of the company. But if there is a lot of supply, that means there are a lot of people who are selling the shares of a company, but there is not enough demand. Then the share prices are going to fall. And lastly, the behavior of the investors too plays a very important role. Sometimes the investors, particularly the traders, are bullish because of some good economic data which has come out, and they may take long positions, and sometimes they are pessimistic. They may short the shares or they may take long or short positions depending upon the economic news flow. Now let's understand the real meaning of fundamental analysis. Now it's a technique which helps us to determine the security's value, and here the focus is on the underlying factors that affect the company's business and its future prospects. So a fundamental analysis answers the following questions. How is the company performing with respect to its top line or the revenues? Are the revenues growing? Is the market share increasing? Is the company profitable? And what are the future prospects of the company with respect to its profitability? Is it in a strong position to outnumber or outpace its competitors in foreseeable future? Is it able to pay its loans and financial commitments? Is the management strategy good enough to accomplish its objectives? So all these questions are answered by the fundamental analysis. So let's understand the difference between the fundamental analysis and the technical analysis. Now, for the fundamental analysis, the focus lies on the quantitative and qualitative factors, which means how much the company is making, how profitable is the company, what is the top line, how much sales they are doing, what's the market share, what's the quality of the product they are manufacturing, is it the high quality, or what kind of customer service they are providing to the customers, are the customers satisfied? Whereas on the technical side, the focus is on the volume, how many people are buying, how many people are selling the shares. Is the volume going up That means the number of people who are buying is increasing compared to the number of people who are selling. And of course, on the price. What are the price movements? Because if the prices are moving, so there is a trend which forms and the trend continues in the foreseeable future. Now, the fundamental analysis is based on data. It's based on the profit loss account, the cash flow, the balance sheet. Whereas the technical analysis is based on charts. That means the movement of prices over a period of time depicted in a graph. Fundamental analysis is for long-term investors and technical analysis is for short-term investors like traders. The goal of the fundamental analysis is to invest for long-term, whereas for the technical, the goal is trading to make profits in a short period of time. It's a short-term objective to make profits. If they expect the share prices to move in a certain direction, so they will take either a long position, and if they expect the share prices to go down, they will short the shares. So that's the goal of the technical analysis. Hope you all enjoyed the lecture as much as I did presenting for you. Do add your comments as it is very encouraging and motivating. Please do like and do subscribe. Thank you.